You caught the breakout, structure looked clean, momentum was there, then price snapped back, stopped you out, and took off in the other direction. It's easy to call it a fake out or blame your indicators, but that wasn't the problem. The problem was structure had already shifted, you just didn't see it. Most traders never learn to read market structure properly. They chase candles instead of trying to see who's in control of the market. However, these two market structure signals will show you when control is shifting, change of character, and break of structure. In this video, we'll break them down, show how they work together, and how to actually use them for better trading. Change of character, or CHoCH, is the market's first warning that something's off. A bullish CHoCH happens when price is in a downtrend. It occurs when price sets a lower low, but instead of continuing lower, it breaks above the previous lower high. It's a sign that sellers are losing control and buyers are stepping in. A bearish CHoCH happens when price is in an uptrend. It occurs when price pushes to a higher high, but then snaps back, breaking below the previous higher low. It indicates that buyers are losing control and sellers are taking over, but by themselves, they don't confirm a reversal. They just tell you the current trend could potentially reverse. That's where break of structure, or BOS, comes in. A bullish BOS happens when price makes new highs, and a bearish BOS occurs when price makes new lows. So if a bearish change of character suggests that sellers might be stepping in, a bearish break of structure is the confirmation they actually took control. The CHoCH is the warning, the BOS is the proof, and when you see them together, you're not guessing anymore, you're reading the shift as it happens. But how do you actually use them? They aren't meant to be used alone. They work as a sequence. CHoCH is your first alert. It's the market saying something's different. Price breaks a key level against the trend, but that doesn't mean the trend is over. It just means control is slipping. BOS is what confirms that shift. It's the market backing up that initial warning with a clean break in the new direction. That's when structure actually flips. If you trade a CHoCH by itself, you're early and taking a bigger risk. Sometimes your trade is successful, but often it's not. Here's where most traders go wrong. They see a change of character or break of structure form and they enter right there. But neither of these is a setup. They're not trade triggers, they're context. CHoCH tells you the current trend might be over. BOS tells you the new trend is likely underway, but neither tells you where to enter or how to manage risk. If you treat them like signals, you'll end up chasing price, or worse, trading right into a pullback. The real question isn't what broke, it's what happens next. Where does price pull back to? Where's the imbalance? Where can I look for an entry? That's where good trades form. Your job is to wait for price to come to you. Let's walk through how this actually plays out in practice. You're in an uptrend. Price is making higher highs and higher lows. Then it breaks below a previous higher low. That's your CHoCH. It's the first clue the trend might be changing. You don't jump in. You mark it and you wait. Now price pulls back, not just randomly, but into a fair value gap, an imbalance. That's where you prepare. Then comes the break of structure. Price pushes through a key level in the new direction. That confirms the shift. The market has accepted the reversal. Now you've got all the pieces. The bullish change of character signaled the shift. Price pulled into a fair value gap, and the bullish break of structure confirmed the trend shift. That's your setup, and it's not based on hope or anticipation. Everything we just walked through, CHoCH, BOS, and fair value gaps, is automated by the price action toolkit. It marks every change of character and break of structure on your chart in real time. It even highlights CHoCH Plus, which are higher conviction structure shifts, but it doesn't stop at signals. It also maps out the areas that matter: order blocks, breaker blocks, inversion fair value gaps, volume imbalances, and much more. It shows you where liquidity is stacked, and it draws premium and discount zones so you know if price is in a favorable location. That means you're not just watching structure break, you're seeing where the reaction is likely to happen. Instead of guessing, you've got a clear read on where price is shifting and where to look for trades after it does. CHoCH signals the shift, BOS confirms it, and the price action toolkit shows you where it matters. You can get instant access to the price action toolkit at fluxcharts.com. The link's also in the description. If this video helped clarify structure for you, drop a like, share it with someone who trades, and subscribe for more. Thanks for watching, and until next time.